Hello and welcome to the Wendell Effect. My name is Brandon Wendell and I'll be your host and guide as I take a look at the financial markets with you today. Just a quick reminder before we get started, we are not broker-dealers or investment advisors and taking a look at this information from an educational standpoint only, not telling you to buy or hold any particular securities. Past performance, no indication of future results. There's always a possibility of loss in the markets. We can never eliminate it. We just try to manage risk. And we are not subject to trading restrictions, so we can have a position in a security and initiate one at any time. Please stay in touch with me. If you got any questions or comments, you can go ahead and hit me up, brandonwendell.cmt@gmail.com. You can also follow me on Twitter. I'm there active at TraderBW. And if you wouldn't mind, please hit the like button and subscribe as well as alerts. So that way you can be notified when new videos come out and you can give us some support and help. I really appreciate that. Thank you. So getting into our schedule for today, actually changing things around a little bit here, we're going to go ahead and do energy index futures as usual with our weekly analysis. We're going to jump into energy futures afterwards, as we usually do, and then a little bit of sector watch, and then some of the stock information and individual trade ideas. So kicking us off for the week of March 27th here on the equity index futures, starting off with the ES. Sideways, boring. That's what it is. I mean, that's the summer doldrums starting a little bit early here in spring. We've got this sideways motion back and forth, and it just is not a lot of fun unless you're a day trader. They can be very, very volatile and scary for some people. You know, we go down to the daily chart and we can see we do have overhead supply that's holding us down. We really have no momentum gained in either direction. We're pretty much flatlining right around 50. You can see the wicks on both the top and the bottom. We're just alternating back and forth and getting very choppy. Be careful. If you're going to get into trades, smaller time frame, make sure that the trend is very, very clear before you take any opportunities in the markets. It's basically what you have to do. Excuse me, looking at the 4-hour chart, we have a rally that's going on today, and this is Monday that I'm recording this, by the way, so you can see that we started selling off a little bit today. We did not get above 60. That's a bearish sign when you can't get above 60. We had come up from a little below 40, which is why we failed to make a new high right away without pulling back. Now that we've pulled back, if on this pullback we do go below 40, expect us to keep dropping. If we don't, expect a bounce. I would expect more of a bounce. I think we're going to just get choppy and sideways in this channel for a little while here. The NASDAQ is a little bit different. The NASDAQ is a little bit stronger than the other indices. We have a clear uptrend going here, and yet again, we can't seem to get above 60. So there's still some underlying weakness. We're running up towards this supply zone on the weekly chart. That could push us a bit sideways in price. And since the Nasdaq's been dragging everybody upwards, again, you could see a bit of a pause in that upward move. Going down to the daily chart, we have a bit of a problem here. Prices made a new high, but we did it with less momentum. It's called negative divergence. And with that negative divergence, we are likely to see it turn back down. And since this was the only index holding everything else up, you might see some sinking on some of the other indexes. And even going to the smaller time frame, you see that weakness moving up to new highs, losing momentum. Rally again, losing momentum. So as long as we stay above 40 and we can get our rallies above 60, we'll hold tight. But if that starts to slip and we drop below 40 on the RSI, look for new lows to be made and maybe a push down towards that 12,433. Looking at the Dow is much weaker. As you see, it dove down about 50% retracement of the most recent impulse up. Still held above 40, but not very well. So we're likely to probably rally up, maybe back up to the origin of these candles, about 34,000 before we start heading down yet again. Really, I could have put a retracement on that downward move that we're doing. And it's likely to push down slowly, though, towards this 31,000 level, which is the next level of demand. On the daily continuous chart, again, you see the sideways choppiness. We got alternating red and green candles. We're just not going anywhere. So we're in the doldrum area right now. And on the 4-hour chart, same thing, more or less, we have this move down below 40, but then we can't seem to get above 60 on the RSI. Usually it means you're going to roll over, come right back down. So we're seeing that choppiness and back and forth play on the Dow and the S&P. Of course, the Russell too. Russell's a little bit weaker. We did make a new low on the weekly chart. As you can see, we broke to fresh lows, but we couldn't get below 40. So it's a very weak downtrend and suggesting we might go back and forth some more. On the daily chart, looking very, very weak, but again, choppy, not straight down anymore, and we lost a bit of momentum. So we might just go sideways before we drop to the 1643 area, excuse me. And on the 4-hour chart, we are seeing a lot of weakness. So here we have an impulse down. We're correcting up. If we're done and we're rolling over, we could just come down towards some of these targets. Again, if we get down to 1667, we really need to get below 40 on the RSI to see push down to 1602. If we're above 40, then we may bounce from this area, or may not even get down there. We may end up just going down to 1707 and bouncing if the RSI stays above 40. So keep an eye out for that momentum. If it's strong enough to the downside, we go. Moving over to the energy markets to see what's going on there. We'll start off with crude oil. Again, we bounced off a weekly demand a couple of weeks back. Did go a little below 40. So when we broke out of the sideways channel, we had a breakout. We're likely to retest the bottom of the channel right around 73 before we head down again. Looking at the daily, you can see it right there, the bottom of that channel right around 73. As I was saying, we got higher lows, higher highs, but it's going to run smack into a lot of selling pressure there and possibly turn back down. There's also the possibility it overshoots the bottom of the range and hits the 74.92, 75 area and bounces from there. Looking at the 4-hour chart, made a run at this little supply zone. It looks as though we're trying to get through it actually, up to that upper area, that 75 area that I was talking about before we go lower once again. On the weekly chart of nat gas, it looks very bearish. I mean, there's nothing else to look at there. It's just going down. On the daily chart, same thing. There's nothing to hold this up. No demand. We're breaking down to fresh lows, and looks like it just wants to keep continuing to the next impulse. We had this previous impulse. New impulse now is likely to duplicate or even at least that 61.8% extension. In the 4-hour chart, I don't really have any good zones. You'd have to look at very small time frames, 60 minutes, 15 minutes, find supply zones that you can take a short. And that's pretty much it. Ride the trend till it's over. On the gasoline, it was interesting. When I marked off that trend line a while ago, we had broken that, came back and retested it. Now, we don't have a lot of momentum in either direction. Excuse me. So we could just go a bit sideways from here. It should bounce off this trend line and go downward, but without a lot of bearish momentum, it's not likely to. We're more likely to go just sideways for a little bit here. Going down to the daily time frame, it's pretty much the same thing. You see we had this breakdown, we're retesting. Doesn't look like it's really going too far. We're definitely getting stalled out at supply as well as that trend line. And you can see we couldn't get above 60 as we came into that area. So without that momentum, you don't break through to highs. You see here, we had a high. Here we had movement above 60. We broke to a new high. Here we don't have that new momentum and we can't seem to break out. So we may turn back down from here. Going down to the 4-hour time frame, you see that we are trying to push through this area of supply. We might actually do it. We have enough momentum, more than we had before, to possibly push a little bit higher, to be honest with you. Could go up towards this origin of selling pressure just underneath 2.7 before it starts collapsing. But there's a lot more bullish pressure. So even though the daily and weekly we're looking a bit sideways to bearish, because of the bullishness on the smaller time frame, might just go sideways for a little while, unfortunately. Heating oil also very choppy as it's moving its channel downwards. We hit the bottom of the channel. We're expecting a bigger bounce, but it hasn't happened. We just have a lot of bearish momentum. So we could be accelerating the downward trend soon. You see the daily chart, we did try to bounce a little bit. We made it halfway back up from the first impulse down here. Actually, second impulse down in 2023. Here's the first, then the correction, now the new one, and we got our correction going on. And on the 4-hour chart, it looks as though we're getting ready to turn around at this area of supply, which is a 50% retracement, as well as the supply zone 2.6474 to 2.66. So we'll keep an eye out for that. We are above 60. So the only way this ends up holding is if we get some sort of negative divergence where we kind of push away, rally into the supply, but we do it with less momentum. So if we don't get that, well, then we usually turn around. Kind of like right here, you see we have almost the same high as we did before. Even though prices made a much higher high, it made one last ditch effort and collapsed without making a new high. We could get something very similar here. So moving on to stock market analysis for the week of March 27th. Taking a look at the last 6 months, this is still looking like a market recovery. Surprisingly, I know it doesn't make sense, right? You see the interest rates going up and inflation being a problem, and yet the stock market's acting like it's coming out of a bear market. And yeah, it kind of did from 2022 into 2023, but are we really recovering or is this a false rally? Well, time will definitely tell. But as of right now, the way people are treating and trading in the stock market, it appears as though this is a rally that should have some legs. It's just not likely to with the lack of momentum that we have right now. It's mostly getting participation from some of the novices and retail customers rather than a lot of the so called smart money, institutional money. In the last month, you can see that actually you got a little bit stronger on technology and consumer services. Again, that's bottom picking. But once more, with the lighter volume that we're seeing during this time of year compared to the winter time, when there's more heavy trading going on, we're not getting as much activity from some of the institutions that we really should be getting. So that's what we're seeing over the past month. And moving into some trade ideas we've been talking about, EVRG unfortunately never rallied up into our entry spot. Doesn't look like we're going to get in on this one. It's supposed to be a short. Actually, what I'm looking at right now is this may become an opportunity. So let me take a look at that. So here we are looking at the EVRG 4-hour chart. And originally I was looking at this area up here as a possibility for a short. But now what I'm noticing is that we may have rally-based drop right here as supply. So you have the rally of the green candle, basing the red, the nice drop, and it kind of followed through. It wasn't immediate with the candles, but it did end up breaking to a fresh low. Unfortunately, we might have missed the entry here, it looks like. Dang it. Yeah, a couple days ago here. Nope, today, Monday, I'm on a 4-hour time frame. So this morning, it looks like we hit that area and are already turning down. So don't chase, wait for the right opportunities. But it looks as though we might have already missed this one. Let me take a look at smaller time frame. Yeah, came right into it and has already rolled over a little bit. So I'm not going to chase that and just let it go at this point. That's the way it goes. Sometimes you get them, sometimes you do not. So let me get back into my PowerPoint. Unfortunately, we missed out. On CF, this one is working out really well. Hopefully, you were able to get in initially on our trade back in February. As you could see, we made it more than halfway to target 1. Heck, we're halfway to target 2. So what I usually do is use 2 moving averages, either the 8 or the 21 exponential moving average. That's the 8 moving average in blue, 21 in purple. Unless we close above the 8 or breach the 21, I stay in the trade until I hit target. So right here where you see right there's a close above the 8, you would get out the open of the next candle. Or if that hadn't happened, once you break the 21 moving average, I simply exit. So I use this averages as a trail stop in a strong trend. And therefore, we're using it here where the trail stop right now is a 76.20, just above the 21. But if we get a close above the 8, I would also look for an exit on the very next open. Let's see. Unleaded gasoline, we already know that's the wrong one. It's SNPS. Unfortunately, this one kind of bounced a couple times off of the demand zone. And you were able to take it multiple times, never stopped out. We're working our way up towards the target, which needs to be adjusted. I adjusted it to 386.52 and 410.35. Same thing. If we get a close below the 8, or if we get a breach of the 21, we need to be out. Otherwise, just keep riding this until it hits its targets. Take your profits at target. RSG, Republic Services, this was a 90% winner. Unfortunately, we've passed the time. We're past that seasonal window on March 4th, and we never got into entry, so we have to abandon that trade. That is no longer valid. CBOE, that shot right through the supply zone. It looked like it was going to work out well, but you see we got too much momentum and just got through, so that one's done. LNQ Corporation, 100% of the time it dropped between March 19th and the 24th. Unfortunately, we couldn't get a good entry here. It did drop and rallied slightly, but never got to our entry. We're kind of done with the seasonal window. It may not work out anymore. So be careful if it does move into your area of supply. Textron was another one, 90% of the time moved to the downside. That also is over as far as the seasonal window. We just never got into the entry. So that's the way it goes. Couldn't take it. So no more trade. And GM, that was a 90% winner over the years. Unfortunately, never made it up to our entry spot, just kind of hung out near the target. So again, that is no more a trade for us. We also had Ventas, 100% of the time, worked out with a pretty good gain. So looking at BTR, we did actually get a positive divergence and a move to the upside there. I'm not sure if I had the follow-up on that one. Let me take a look, actually. So what happened there? I'll go to the daily chart, VTR. And nope, that is the follow-up right now. We had the positive divergence down here, and we popped a little to the upside. So we're on our way up to target 1. They should be on the board for that one. You could go on the 4-hour or the daily chart. That's what happened. Okay. Hess Corporation, another one that had 100% winners over the last 10 years to the upside here. And you can see it's moving up without coming into our entry. So at this point, I'm not going to keep chasing it. So I'm just going to abandon the trade, and that's it. A couple of new trade ideas for this week. Let's take a look at those, and we'll add them to our bucket here. We have AbbVie looking for a possible rally. I thought I had the information. Maybe it's behind it. Yeah, it is. Let's see, does this come out? No, it doesn't. Hang on a second. I need to fix something here. So we'll do that. And there it is. AbbVie, 90% of the time from March 28th to April 27th for the month, it usually rallies on average 6%. Now, last year it didn't work out, but for the past 10 years, 9 out of 10 worked pretty well. So looking at AbbVie, there's a chart. There it is. You can see that we do have this little demand zone at the beginning of this move to the upside. If we can come back to that 150.64, 146.57, you could potentially buy there as long as the RSI is above 40. So look for that pullback and the bounce. Target 1 here, 163.37 before this peak, and target 2 before the other peak at 171.92. Next, I have First Energy Corp. This is a short opportunity, very short-lived. It's only from March 28th to April 2nd. 90% of the time, though, it's gone down. Last year, it didn't. And you can see that we have pretty good selling pressure here on the 4-hour time frame. It's FE for the symbol, First Energy. Rally, base, and big drop. So if we can get into that 40.19 to 40.62, looking for the short with a target number 1, 38.30, target 2, 37.13. So that's going to wrap it up for this week of the Wendell Effect. I want to thank you for being here and spending some time with me. You can catch me on email if you got questions or you want to see me go over something in the future. BrandonWendell.cmt@gmail.com. You can also hit me up on Twitter @TraderBDub. And if you wouldn't mind, please hit the like button, hit subscribe and the alerts. That way you can support me and my fellow people who put this video together for you, and we can continue to bring it to you every week. Until next time, everyone, trade safe, trade well. Take care.